Hey, Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 77. And we're going to dive into a headline that, if you took it on face value, would scare the living daylights out of you. But before we do that, I want to talk about the other big news coming out in financial markets today. Yesterday, for those people watching this when it gets released, and that is that the Bitcoin price has gone past $100,000 US for the first time ever, surged to $103,000, and has created an enormous amount of people who are very excited about the crypto market. And I was actually going to do the whole episode on this, but the article that I looked at using was only half written. It finished with more to come. And so I thought I'd just mention it up front. I know there's lots of people in this community who want to know what I think about it. And so let me just share briefly my thoughts on the crypto market. And it's funny that in the last week or so, my social feeds have been filled with Warren Buffett little snippets. And one of them was when he was talking about the Bitcoin price and how you were relying on somebody else to pay for the Bitcoin, like if you wanted to sell it. So you're buying an asset that doesn't produce anything, and there's nothing tangible about it, and you're relying on somebody else in the future paying more for that asset that's not producing anything. And whilst I'm sure there are plenty of people who will have descriptions that are counter to what Warren Buffett thinks about crypto, ultimately, at the moment, we've seen the price surge dramatically since the US election. And that's not off the back of Bitcoin being any more valuable. It's off the back of perceived or rumor of what might happen in the US under the new government and with the influence of Elon Musk in that government. But until something actually happens, people are buying the rumor. And more than likely, and this is the bit that I want to forewarn you about, this is a common financial market mantra: is you buy the rumor and sell the fact. And so it'll be interesting to see what does happen when the new government comes in, and then see what they actually do when it comes to the crypto market, and whether or not it is something that becomes more mainstream in terms of daily use and therefore has some value. But for now, I believe the risk of a major downturn is, the fluctuations are just so dramatic that I can't get myself comfortable with the risk. But that doesn't mean people aren't making money. I've got plenty of clients who are making great money from having crypto investments. I just can't get myself comfortable with it, and therefore I don't teach it. But that doesn't necessarily mean you should stay away from it. I was actually asked on Ticker the other day. I've got a video coming out probably in the next week or so, where I was asked, should you be in or out of the crypto market? And my basic, very quick answer was, if you are comfortable with the risk profile of crypto, then you probably want to be in it and ride the wave, but be mindful that there is potential for a turnaround if a lot of these things that we were being told might happen don't end up actually happening. And so let's dive into today's story, which is a little bit doom and gloomy, and it starts with the word gloomy. Gloomy, Aussie dollar will crash to 50 cents. And when I see an article like this, I'm just attracted to it like a magnet when it comes to these videos, because this article says the Aussie dollar will crash to 50 cents. So if you were reading that and or saw that headline and didn't read the story or have a more broader understanding of what's going on in financial markets, and you just saw that's going to crash to 50 cents, you'd probably put your international travel plans on hold. But if you've got any cash or any investments in US dollars, you'd be jumping for joy. But at this point, let's have a look at why the theory here is that the Aussie dollar will crash to 50 cents. And I'm emphasizing the word will because it's a big claim. And it's basically a result of a whole bunch of analysis that, again, when it comes to these things, there's always more to the story. And it's basically talking about the prospects for growth in the US versus Australia back in 2001, which crunched our dollar down to less than 50 cents. And then when we go into the analysis, it's talking about a sagging Australian economy. And look, we've talked on these weekly wisdom videos that the Australian economy is, to an extent, sagging. It's only being propped up at the moment by government spending. And so we are in a very precarious position when it comes to the growth of our economy, which is predominantly being held back by the high interest rates. And the RBA can argue to their blue in the face that the interest rates are not the problem, but I think it's fairly obvious that they are. And so it talks about the private sector being in a recession, whereas the US economy has been booming post-COVID, and that's absolutely the case. And then you might think, well, hang on a minute, US economy booming since COVID. Weren't we told back in August this year that the stock market dropped 8% because of fears that the US was going into a recession? And here's why I do those videos, because clearly both of those things can't be true. And so it means taking a deeper look at the information. And so you can see the Australian household disposable income when compared to other countries, we are absolutely behind the eight ball and seeing our comparative wages dropping, which is not great. And it is a significant problem with the cost of living crisis. And this is in all respect, despite commodity prices doing well as a result of the war and all other things in the economy, not just the Ukraine position. And then it makes the link. So there's always the link to the Chinese economy when it comes to our Aussie dollar and the fortunes of our economy, because we have thrown pretty much all of our eggs into the Chinese economy basket when it comes to growth and all those types of things. And we all know that the indications are that the Chinese economy is slowing down, and we've got a graph here to demonstrate that that's the case. And so therefore demand for some of our key exports is going to be less than previously. And we've seen that in a number of stocks who came out with their financial year results in August, explaining that they had a bumper 12 months, but the next 12 months, they don't expect to be as good because of this demand from China. And then it goes in to talk about how the US economy is doing so well. They've been able to grow profits in the corporate sector, which is always a good thing for the economy. And they're putting a lot of their economic growth into the AI sector, weight loss drugs, automated cars, all these types of things. And then it makes a statement which I think is worthy of a little bit more time. It says all of that's happening before you throw in Donald Trump's tax cuts and tariffs to keep domestic demand and interest rates firm. And it then talks about how he's going to whack the Chinese economy supposedly with these tariffs, and how that will impact the Chinese economy. But what's left out of this article is other news that's come out in the last 24 hours, where the Chinese government has potentially withdrawn $690 billion worth of imports from America. So already, I think you're seeing signs of the Chinese government fighting back and getting on the front foot, because they don't have to wait till the 20th of January to be in power. They're already in power, and they are already putting measures in place to say, hey, if you want to play the tariff game, we can play that game as well. And so the American economy that this story seems to suggest is just full steam ahead, might have a few pauses along the way, if these tariff policies start to get implemented. And so that's a very interesting approach about how the economies outside of the US who are being threatened with tariffs are going to fight back long before those tariffs may be implemented. And let's face it, what is said and what is done will be a very interesting story as time plays out. And so we will see what happens there. Obviously, it was suggesting that if the Chinese economy slows down, that will have further pressure on the Australian economy. No doubt it would. But like I said, we have to wait and see what actually happens versus what doesn't, because there's not a lot of winners out of a trade war. And I think the new government will learn that pretty darn quickly, because at the moment they think they have all the bullets, but I think a few are already being fired. Mexico's fired some, China started to fire some, Canada not necessarily firing any bullets, but trying to at least calm the situation down. And so we'll see what happens. Aussie dollar very much been moving in step with the Chinese yuan based on our reliance on their economy, like I said. But ultimately, suggesting that the Aussie dollar is going to drop to 50 cents, and as I said before, emphasising the word will, is probably a step too far for this article, given how much additional stuff going on and around the Australian economy that has been completely left out of the analysis, which is, I understand, it's going to happen because you can't cover everything. But to suggest that we're going to go and will see 50 cents for the Aussie dollar in the short term is, for me, a little bit of a step too far. And so we'll just see how it all plays out. As soon as Australia starts cutting interest rates, that will make the Aussie dollar a little bit more attractive to overseas entities looking for some returns. So we've got all of those factors to play into the equation. And obviously, like I said, a change in government in the US, what they say they're going to do, what they actually end up doing, just like any other government around the world, we'll see what happens. We've seen it here in Australia with the Labor government not necessarily delivering on what they said they were going to deliver on. Not a political statement, just fact. And it'll be the same in the US with the change over there as to what was said versus what actually ends up getting done. So we'll see how it all plays out. But from this weekly wisdom video, I want you to take that, as per normal, none of this noise needs to create fear. And it's all that's designed to do is create fear. It's not designed to inform you and help you grow your wealth and manage your money. This is just about to get eyeballs and create a bit of fear that can then be leveraged into more fear and more eyeballs. So just throw this one in the bin. And sure, if it happens, you can come back and say to me, well, this person was right. The Aussie dollar hit 50 cents, and it may very well do that. But to say that it will is a big step and way too early in the economic analysis that I'm seeing and looking at. Sure, it doesn't make me right or wrong. It's just my opinion, and I'm sharing it with you so that you don't get caught up in all of this fear and stop investing and stop doing what's going to grow your wealth, because the Aussie dollar dropping to 50 cents will have positive impacts in some areas, negative impacts in others. And so you just got to manage your way through if it actually takes place. And one of the things that will happen if it drops to 50 cents, and will happen long before it gets there, is we'll start to see interest rates coming down. So as per normal, the outcome I want you to take from this is ignore the fear and carry on. And if you're watching this on YouTube, do us a huge favor, hit the like and subscribe, the subscribe button and the little bell if you're watching on YouTube so you get notified. Subscribing helps grow the channel. More people get to see the videos. And if you're watching on Facebook or LinkedIn, hit the like button, hit the comment button and give us a thumbs up or a thumbs down, depending on what you're thinking. And leave a comment and share it with your friends so that more people can avoid the noise and the fear coming from some of these articles that we look at on these videos. That's Woody's Weekly Wisdom, episode 77. I'll see you again next week. Have a great week. Cheers.